Hi, hello, welcome to all. In this video, in continuation with last class, what we are discussing input tax creditor. Test your knowledge questions. Up to 17th question was completed. Now 18th question. What is there in 18th question? All in one store is a retail chain of departmental store having presence in almost all metro cities across India. So it has all over India their stores. Both exempted as well as taxable goods are supplied in such stores. Okay, there is carrying both taxable as well as exempted, so there may be availability of common credit issue. Next, the store operates in rented properties, so they are rented properties. All in one store pays GST under regular scheme. They are in regular scheme. In Mumbai, the store operates is a rented complex, a part of which used by owner of the store for the personal residence purpose. So out of the complex is using for personal purpose also. Next, personal purpose also. Here, what is their all in one store Mumbai franchise furnishing the following details. So they are provided following details. Next, aggregate value of various items sold in stores. So they are sold some items, that details were provided. What is they sold? Out of that, aggregate value of items in items sold in store, that is taxable item will be 42 lakhs. 42 lakhs will be taxable item, means this is sales value. It will we will arrive that gross liability, outward tax liability on 42 lakhs, whatever tax rate applicability. Next, items exempted has a wide notification. It is exempted items. Next, items not levied to GST. Items which is not levied for GST. Okay. Next, Mumbai stock stores transfers to another all-in-one store located in Goa certain taxable items for the purpose of distributing the same as free samples. The value declared in the invoice for such items is 5 lakhs, but actually the such items are sold in the Mumbai store at 8 lakhs. So on the 8 lakhs, whatever the amount transferred, 8 lakhs into whatever the tax rate is applicable, the tax rate is taxable. So 42 lakhs into tax rate and 8 lakhs into tax rate will be their output tax liability. Okay. Next, after that they have provided aggregate value of various items procured for being sold in the store. That is, procured means purchase details they are providing related to ITC related information. Okay. First information, taxable items. What is that? Taxable items. Taxable items, we will get that ITC 55 lakhs into whatever the tax rate provided. Next, items exempted wide notification 15 lakhs. ITC or exempted notification, exclusively exempted notification, we will not get the ITC. Next, items not levied to GST. If they are not levied to TXC, it is not taxable, so no GST is paid. Freight paid to good transport agency in inward transportation of taxable items. 1 lakh. 1 lakh into 5% will be reverse charge mechanism. GTA will be 5%. If GTA paid at the rate of 12%, we will not pay any tax. Here they are not provided any information relating to 12%, so we will pay the amount at the rate of 5% in reverse charge mechanism. So ITC will be available. 1 lakh into 5%. Next, freight paid to GTA for inward transportation of exempted items 80,000. 80,000 into 5%, it is also ITC available. Next, goods paid, freight paid to GTA for inward transportation of non-taxable items 20,000. 20,000 into 5%, it is also available for ITC reverse charge mechanism. And next, monthly rent payable for the complex 5,55,000. 1/3 of total space available is used for personal residence purpose. 5,50,000 into whatever the tax rate applicable, we will find out, that is total input. After that personal residence means non-business purposes. Out of whatever the tax amount arrive, 1/3 will be deducted. Next, actual activity of packing the items and putting the labels of the stores along with the sale price has been outsourced. So amount packing charges, we are paying the packing charges. So it is it is related to ITC. We can claim ITC for that for 45,000, whatever the 45,000. Next, salary paid to staff at the store 2 lakhs. It is not a ITC items, it is employer-employee relationship, so no GST is arrive. Next, GST paid on inputs used for personal purposes. It is come under total input, but it will not take for eligible ITC. It is not eligible ITC, but we will take for total ITC. Next, GST paid on rent a cab services available for transportation of employees, which is not obligatory under in the ITC blocked credit. We will take in total credit, but it will be excluded from eligible ITC. Next, given above available information, you are required to complete the following input tax credit to electronic credit ledger. Input tax credit to electronic credit ledger means whatever the credit is there, we will get that information. Whatever the information out of that purchase and GTF for all charges and packing charges, rent, cab, all whatever it may be exempted or not, we will come under the electronic credit ledger. After that electronic credit ledger, compute common credit. Common credit means out of total input, we must reduce from 3 items. What with the 3 items will be: one, non-business purposes used for the item non-business purposes, that is rent or for personal use, some are used for personal use, and next we will reduce the exempted related to exempted items, what the GTA paid for exempted related items and in any outward supplies or for non-taxable items, that one. Next, and non-business and exempted, and third one will be blocked credits. What is that blocked credits? That rent cap services and free samples for the blocked credits we must reduce, then we will get the common credit. Next, input ITC attributable towards exempted supplies out of common credit. What we will get the out of common credit, we must reduce the amount of credit related to exempted turnover. So exempted amount, whatever the output tax eligible ITC will be deducted, then we will get the ITC attributable towards exempted supplies out of common credit. So we will get the common credit. From common credit to, we will reduce the taxable credit that is eligible for ITC, that is GST paid on taxable items and GST freight paid for inward transportation for regular taxable goods, the 2 items. After that, net GST payable for electronic cash ledger for the month of opening balance ITC was nil, so there is no opening ITC. We should pay the remaining ITC. Whatever the common credit we will get on the exempted credit, we will add on output tax liability, or we will reduce from eligible ITC. Whatever the credit related to exempted goods. Next, wherever applicable, GST and reverse charge is payable at the rate of 5%. So reverse charge 5%, and by all in rate of GST in all other cases 18%. So it will be 18%. Next, all inward supplies are procured from registered suppliers. Okay, wherever applicable, the amount given are exclusive of tax. Okay, subject to the information given above, assume that all other conditions are satisfied for availing the ITC have been fulfilled. So they are provided all information we need to compute. Whatever we need compute to, that is related to common credit and ITC available for common credit, eligible for ITC and exempted credit, that much. So computation of ITC credited to electronic credit ledger as per rule 42. As per rule 42, the ITC in respect of inputs or input services being partly used for business purpose and partly used for other purpose, or partly used for affecting taxable supplies and partly affecting exempted supplies, shall be attributed to the purpose of business for affecting the taxable supplies. So we need to apportion what is taxable related. From that ITC created to electronic credit, whatever the amount is there in electronic credit ledger, under electronic credit ledger we will get all ITC, that is even to you for non-business purposes, even for exempted purposes, or even for exempted blocked credit, they will create on our electronic credit ledger. From out of electronic credit ledger, we must reduce the items or T with total input available minus T1, T2, T3, that is T1 means that is related to non-business purposes, T2 means affected exempted sales supplies, T3 means blocked credit. Next, computation of total input tax credit, total input tax involved. What is there in total input tax involved? that is GST paid on total taxable items. That is, we are procured some items 55 lakhs, tax rate will be 18%. Next, items wide notification, since exempted goods no tax was paid and non-taxable goods not levied any tax. Next, GST paid on reverse charge mechanism, whatever the tax we are paid in reverse charge, we will taking in for total ITC, that is GST DTA paid for non-taxable items, exempted items, non-taxable items. But out of this, only taxable items will be eligible ITC. Next one, GST paid on rent 5,50,000 into 18%. Out of this, 1/3 will be personal purpose, that is non-business purpose. Next, but it will full amount will be credited in electronic ledger. After that, we will bifurcate that amount. GST paid and packing charges 2,50,000, 18%. Next, a salary is paid to staff at the store at the source. It is services by an employee to employer in the course or offered in relation to his employment is not a supply. Is not a supply. So is employment, it is not a supply as per schedule 3. And next, GST paid on inputs used for personal purpose, and GST paid on rent cab services available for business purposes. Next, GST paid on items given as for free samples 4,000. These all are created in our electronic credit ledger. This is T. Out of this T, we must deduct the amounts of non-business purpose, exempted ITC related to exempted purpose, and ITC related to blocked credit. So what is this in non-business purpose? First, one, GST paid on monthly rent attributable to personal purpose. When you are using for personal purpose, it is not a business purpose, so it is a non-business purpose. That is, out of 99,000, 1/3 will be the personal purpose. Next, GST paid on inputs used for personal purpose 5,000. Total 38,000 will be the non-business purpose. Out of next, GST paid on under reverse charge on freight paid to GTA in inward transportation of exempted items. Exclusively for exempted items, whatever the GTA paid, it will be reduced from total ITC. So as per section 2 class 47, exempted supplies means, what is meant by exempted supplies? Supplies which may wholly exempt from tax by way of notification issued under section 11. Hence, input service of inward transportation of exempt in terms is exclusively used for affecting the exempted supplies. Next, exempted supplies includes non-taxable supplies also. So in terms of section 2 class 47. Hence, input services of inward transportation of non-taxable items is exclusive using the affecting of exempted supplies. So this will be excluded. Next, last one will be blocked credits. Related to blocked credits, GST paid on rent a cab service available for business purpose, it is a blocked credit. Next, ITC on rent cab service is blocked under section 17(5). At the same, is not used by all-in-one store for providing the rent a cab service or as part of the taxable composite or mixed supply. GST paid on items given as free samples will be 4,000. Next, ITC on goods inter area disposed by way of free samples is blocked under section 17(5). Next, input tax for which credit is blocked under section 17(5) will be 8,000. So total 313233 will be the amount will be deducted from T. That is, T will be common credit created in electronic credit ledger. So T minus T1 plus T2 plus T3. The amount will be, this is electronic credit ledger. ITC credited to electronic credit ledger. And out of this common credit, what is the common credit? From C1 minus T4. T4 will be taxable credits. Taxable credit are GST paid on taxable items 9,90,000 and GST paid under reverse charge mechanism on freight to GTA for inward transportation of taxable items related GTA. Input tax exclusively attributable to taxable supplies. So common credit will be C1 minus T4, that is 1,11,000. 1,11,000 will be common credit. Out of this common credit, we will deduct the amount related to the exempted supplies, that is common credit into exempted turnover divided by total turnover. So common credit will be year aggregate turnover will be 12 lakhs plus 13 lakhs. 12 lakhs plus 3 lakhs plus 8 lakhs. 12 lakhs plus 3 lakhs plus 8 lakhs. 12 lakhs is related to ITC exempted, and 3 lakhs is related to ITC not levied, which the items are not levied to GST, and that 8 lakhs will be the that stock transfer, which is provided stock transfer for another state. So note, transfer of items to store located in Goa is interstate supply in terms of section 7 of GST Act. Whenever you are send the items and is included in the total turnover, so it will be included in total turnover. Such supply is to be levied as per rule 28. However, value declared in the invoice cannot be adapted as the value, since recipient store is Goa is not entitled for full credit because the goods are distributed as free samples. ITC on which is blocked, therefore open market value of such goods, which is value of such goods, shall be taken for credit. So out of 1,10,000, 1,11,000 into 15 lakhs related to exempted turnover divided by total turnover will be calculated. Exempted turnover will be only the exempted items plus ITC items not levied for GST. 12 lakhs plus 3 lakhs, 15 lakhs. 15 lakhs divided by 65 lakhs into 1,11,000. 1,11,000. Next, 25,615 is a credit related to exempted supplies. Out of that, common credit minus exempted related credit. Next, we will eligible ITC, we will get that 85,385 will be the eligible ITC. Now GST liability under forward charge, that is taxable items sold in the store, 42 lakhs into 18%, that is sale value 7,56,000. Next, taxable item transferred to Goa store, that is 8 lakhs into 18%, 1,44,000. Next, total output tax liability under forward charge, that is 9 lakhs will be the amount, that is 7,56,000 plus 1,44,000 less ITC credited to electronic credit ledger. Out of this amount, whatever the credit eligible common credit will be reduced from total credit. Out of total credit we will reduce that amount. We will get this credit ITC credit to electronic credit ledger 10,80,385. ITC carry forward to the next month will be 1,80,385. But whatever the amount related to reverse charge mechanism, you must be paid in cash only. So freight paid to GTA for inward transportation taxable items, freight paid to GTA for inward transportation of exempted items, freight paid to GTA for inward transportation of non-taxable items, you must be paid in cash only. Total tax liability under reverse charge, you cannot utilize this credit amount to paying of this GTA services. Next, net GST liability to be paid in cash will be 10,000 as per section 49(4). Amount available in the electronic credit ledger may be used for making the payment towards output tax. However, tax payable under reverse charge is not an output tax in terms of section 2 class 82. Therefore, tax payable under reverse charge cannot be set off against the ITC and thus will have to paid in cash. Next, while computing net GST liability, ITC credited to electronic credit ledger can be alternatively. This is alternative way. This one here we see the total ITC credited to electronic credit ledger 11,06,000. ITC reversal will be 25,615. Net ITC available. Or we can do another like that, because this 2,25,601 by directly added to the output tax liability. In that way also it is correct. Next question, 19th question. What is there in 19th question? 19th. Okay. In 19th question, one is Shopee is a retail store. Shopee is a retail store, registered retail supplier of both taxable and exempted. So he is providing both exempted and taxable, registered under GST in the state of Rajasthan. Vanish Shopee has furnished the following details for month of details of sales, that is supply of taxable goods 50 lakhs, supply of goods not levied to GST 10 lakhs. Next, details of goods purchased for being sold in the shop, taxable goods will be 45 lakhs and goods not levied to GST 4 lakhs. So first they are provided related to sales related, that is 50 lakhs into tax rate, whatever the tax rate we will be taxable. Next, supplies of goods not levied to GST, it is not levied to GST, so no tax portion, no tax portion. Next, details of goods purchased for being sold in the shop. It is related to ITC products. It is related to ITC product. Whatever the amount, 45 lakhs. 45 lakhs into taxable item, 45 lakhs. 45 lakhs into whatever the GST rate component was provided. Whatever the GST component rate was provided will be taken. So out of 45 lakhs we can get the ITC. Next, goods not levied to GST. Goods not levied to GST, it is a non-taxable. So no GST is paid on that. So no ITC issue. Next, details of expenses. 3 lakh 50 monthly rent payable for the shop. That is 3 lakh 50 will be the monthly rent. Out of a monthly rent we must pay the GST. So whatever the GST rate applicable, you should pay amount and get the ITC. Next, telephone expenses paid, 30,000 for land and phone installed at the shop and 20,000 towards mobile phone bills of the employee. Mobile phones are given to employee for official purposes. Whatever the amount is there, you must pay the GST on 50,000. You can get the amount of ITC total amount. Next, GST paid on audit fee to statutory accountant, 35,000 for filing of income tax returns and statutory audit proceedings financial year, and 25,000 for filing GST returns. 60,000 out of 60,000, whatever the ITC you have paid, you must clear the claim. There is no issue. Next, premium paid on health insurance policy taken for specified employees as per the of the shop as per company policy. It is a company policy, it is not obligatory, so no ITC will be available. Next, freight paid to goods transport agency, services taxable at the rate of 5% for tax inward transportation of goods not levied to GST. If they are not levied to GST, there is no issue of ITC. There is no issue of ITC. Next, freight paid to, here one point missing, no, premium paid to health insurance policy, okay. Freight paid to goods transport agency taxable 5% for inward transportation of taxable goods, that is 1 lakh 50. If 1 lakh 50 taxable goods related to, so you can claim the ITC 5%. Next, goods given on free samples not included in taxable goods, 45 lakhs. So it is a free items related. When it is a free items, on free items you can, it is a blocked credit, so you will not get any ITC related these items, so it is not included in total taxable value. Next, all the above amounts are exclusive of all kind of taxes wherever applicable. Okay, all inwards and outwards, all inwards and outward supplies made by Vanish Shopee are from to registered supplier within Rajasthan. So they are in Rajasthan, within Rajasthan they had done the business. Next, assume wherever applicable for the purpose of reverse charge payable by Vanish Shopee, CGST, HGST, IGST rate will be 2.5, 2.5, that is 5% respectively, and CGST, HGST are for other 6% or 12%, 6% for CGST, 6% for HGST and 12% for HGST respectively in all other cases. There is no opening balance in the electronic cash ledger or electronic credit ledger. Subject to the information given above, assume that all the other conditions necessary for availing ITC has been fulfilled. Next, you are required to provide the complete the following information, that is ITC credited to electronic credit ledger. Whatever the amount credited in electronic credit ledger, we must provide. Next, common credit available for apportionment. Common credit means, that is T out of total credit deducted that related to that amount exclusively for taxable items, you will get the apportionment. ITC attributable towards exempted surplus. Out of common credit, you will common credit into exempted turnover divided by total turnover. Net GST payable for electronic cash ledger. Whatever the amount remain payable, it will be payable with cash. And reverse charge mechanism, GTS services will pay in cash only. They will not allow for credit utilization. For that GTA purpose, reverse charge mechanism expenses. Next, question number 19th answer 19th answer. What is there in 19th answer? So computation C1, C2, C3, E9, 19th. First, what is we want to common credit ITC? Common credit ITC credited to electronic credit ledger. As per ITC of input tax attributable to inputs and input services intended for business purposes, we must take first intended for business purposes is credited to ITC in ITC attributable to input and input services. That is electronic credit ledger. We will which is the ITC using for business purpose, we will create that amount. Next, input tax attributable to input and input services intended to be used exclusively for non-business or exclusively for exempted supplies or exclusively for which is the blocked credit will be deducted. So it will be not credited to electronic credit ledger. In light of the aforementioned provisions, the ITC credited to electronic credit ledger will be provided like this. What is their taxable goods? It is allowable and not levied GST, so no ITC. Next, GST paid on monthly rent for shops, so it is a available ITC. Next, GST paid on telephone expenses, allowable. Next, GST paid on audit fee, allowable, and GST paid on premium, it is not allowable. It is not a obligatory. When it ITC on health insurance service is allowed only when it is if it is a obligatory for employers to provide such services to its employees under any law for the time being in force. Next, taxable goods given as free samples, that is ITC on goods disposed of by way of free samples is a blocked credit. So free sample will be blocked credit, treated as a blocked credit. Next, GST paid, freight paid to GTM for inward transportation of non-taxable goods under reverse charge mechanism. Since here definition of exempted supplies, which is a not taxable items, we will not take that ITC. For calculation, here we are provided two items. In starting they are provided non-levable. Here what is there? Non-levable GST is different from non-taxable goods under reverse charge. Here non-taxable goods, but since definition of exempted supply under section 2 class 47 specifically includes non-taxable supplies, the input services of inward transportation of non-taxable goods is being exclusively used for effecting exempted supplies. Okay. Next, freight paid to GTF for inward transportation of taxable goods under reverse charge will be 1,50,000, that is 5% will be taxable. Next, ITC, total ITC credited to electronic credit ledger will be 3 lakhs, and ITC reversal. This ITC reversal will be calculated based on total common credit into exempted turnover divided by total turnover. Here they were provided the note. What is this? First of all, ITC credited to electronic credit ledger and less amount, ITT taxable amount, and ITC and freight taxable freight. Then we will get the common credit amount. Out of this common credit, we will take that common credit into aggregate turnover related to exempted turnover divided by total turnover. So 4,600 will be the ITC attributable to exempted supplies. Now, computation of net GST payable. So supplies of goods, taxable goods, that is 50 lakhs. 50 lakhs into 6% will be taxable. Next, total output tax liability under forward charge mechanism will be 3 lakhs less ITC. Whatever we have calculated above will be calculated. ITC net GST payable will be 3,250, and freight amount will be paid in cash only, not allowed to utilize the credit. So total tax liability will be under reverse charge will be 5,000. Net GST liability will be 8,250. Amount available in electronic credit ledger may be used for making towards output tax. But however, tax on payable under reverse charge is not an output tax in terms of definition of output tax provided under section 2 class 82. Therefore, tax payable under reverse charge cannot be set off against the input tax credit and thus will be paid in cash. Next, question number 20. What is there in question number 20? Under question number 20, what is there in question number 20? Okay, Mr. Rajesh. Mr. Rajesh Surana. Mr. Rajesh Surana has a partnership firm in the name of Surana and Co. in Surana and Rajasthan. He is in Jaipur. Though okay, the firm registered under GST in the state of Rajasthan manufactures 3 taxable products and 1 reverse charge product. That is MNO will be taxable products and N is the payable under reverse charge. The firm also provides taxable consultancy services. He is providing service also. Next, turnover of M exclusive export to sales 14 lakhs. So 14 lakhs will be its turnover. It is liable for GST. Next, turnover of N 6 lakhs. This tax is not leviable because it is payable under reverse charge mechanism. Reverse charge mechanism. Because reverse charge mechanism recipient will be payable. Next, turnover of O. Turnover of O exclusive export services, that is 10 lakhs into whatever the tax rate applicable. Next, turnover here excluding export turnover exports sales. Next, export of M with the payment of IGST not eligible to avail benefit of merchant export. Export of M 250 into whatever the tax rate applicable. Next, consultancy services, they are providing in addition to this, they are providing consultancy services provided to independent clients located in foreign countries. So it is a exporter. Because why in all cases the consideration has been received in convertible foreign exchange. For as per sections of 2 class 6, export means what? If by saying the transaction this is the export, we must satisfy the 5 conditions. What is that 5 condition? There is supplier located in India. So in our case, consultancy firm, our client is located in India and recipient will be outside India. So they are providing service to outside India. And place of supply will be outside India. In case of this, location of recipient will be the place of supply. So it is place of supply will be outside India, and payment will be received in consideration will be received in convertible foreign exchange. So they are tell that consideration will be receiving in foreign convertible changes, and some cases in permissible rupees, in some cases that is Nepal and Bhutan. Next, other condition, they are not the distinct relationship persons. So they are not related person, they are unrelated person, they are told. So this is export. So on export you are not payable to any IGST, any IPOL GST, only we will not pay any. So this amount will be not chargeable to GST. Next, sale of billing, it is not liable to GST. Because it is not neither a sale of neither a supply of goods or nor a supply of service. It will not be eligible for any amount. Next, but for calculation of turnover, it will be considered that stamp duty will be considered. What is the stamp duty value here? 2.5 lakhs being 2% of value. So 2.5 divided by 2%, it will be, I think, 1 crore 25 lakhs. Here 120 they are provided, but it will become 1 crore 25 lakhs. It will be considered as total turnover. When calculating the common credit, we require total turnover will include sale of billing turnover also. Next, interest received on investment in fixed deposit with banks. Interest received in bank, it is not a taxable, it is a exempted service. Next, sale of shares was specifically excluded from goods or services. It is removed. So to whatever the amount, purchase price 2 crores 40 and sale value 2 crores 50, but for the purpose of calculation of turnover, we should take that sale value into 1% for in consideration of total turnover. Next, legal services provided for an advocate in relation to product M. So whenever you have taken the legal services, and our person is a registered person which crosses the 20 lakhs turnover, so he would liable to pay GST on reverse charge mechanism for legal services. Whatever the legal services he has taken, it is payable on reverse charge mechanism. Okay. Next, Common input and input services used for supply of goods 50 lakhs. That is services mentioned above. Inputs means goods related. Goods rate will be applicable. Input services rate will be applicable. ITC, this is ITC information. Next, with the help of the above information, mentioned information, compute net GST liability of Surana and Sons payable from electronic credit ledger and electronic cash ledger, as the case may be. For them, assume the rate of GST on the goods will be 12%. This is here inputs will be 35 lakhs into 12% will be eligible ITC, and 18% into 15 lakhs will be eligible ITC. Subject to information given above. Assume that all the other information, other conditions necessary for availing ITC has been fulfilled. Turnover of Surana and Sons was 85 lakhs in preceding financial year. So we need to calculate total outward taxable supplies, whatever the amount is there, and from that input whatever calculated input tax rate deducted, and pay the remaining amount, and reverse charge mechanism amount will be payable. So computation of GST in case of here. Question number 20, I think so. Okay. 19th, 20. So what we are doing? First, we will compute the computation of net GST liability of Surana and Surana Sons tax paid. So from this we will pay first GST payable on outward supplies. It will come from note 1. 3,18,000. Next, less ITC input tax credit. Input tax credit, how we will find out the input tax credit? Whatever the common credit, out of common credit we will deduct the credit related to exempted services. Next, GST payable for electronic cash ledger 39,820, and out of that they have provided legal services. They are taken legal services. It must be payable because reverse charge, because tax on legal services provided by an advocate to business entity is payable under reverse charge by the business entity in terms of notification. Further, such services are not eligible for exemption provided has the turnover of the business entity in the preceding financial year exceeds 20 lakhs. Our turnover was exceeded 20 lakhs already, so we do not have the exemption benefit. And here GST is payable, and that reverse charge will be 18% because they are not provided 5%. They are told that all the IT for goods they are 12% and services 18%. So we will liable to pay at the rate of 18%. Next, total GST paid from electronic cash ledger A plus B. Here as per section 49.4 amount of electronic amount available in electronic cash ledger may be used for making a payment outward towards outward tax, may be used for payment of outward tax. But however tax payable under reverse charge is not as an outward tax in terms of section 2 class 82. Therefore input tax credit cannot be used to pay tax payable under reverse charge, and thus tax payable under reverse charge will be paid in cash only. Next, here computation of outward taxable supplies. That is turnover M. It is a taxable item, so liable to be payable GST at the rate of 12%. 14 lakhs into 12%. It is goods, so we will take the percentage as 12%. Next, turnover of N. This is tax on N is payable under reverse charge by the recipient of such goods. So 6 lakhs it is not paid by V. Our client will be paying on that turnover. Next, turnover of volume O, liable to be GST at the rate of 12%. 10 lakhs into 12%. Next, export of M with payment of IGST. It is liable for we are paid the IGST, so 3,30,000. Next, export of O you under LUT. LUT means it is a zero rated supply. It will be taxable but nil rate. 10 lakhs into nil rate. Next, to consultancy services, it will be become the export turnover. So on export it is not a, on export we are not pay any IGST or CGST, SGST. So for transaction will be treated as export when it is satisfied the following conditions. What is the conditions? Supplier of service is located in India. Supplier will be located in India. Next, recipient of service is located outside India. Next, place of supply of service is outside India. Place of supply will be outside India. Next, payment of service has been received in convertible foreign exchange or Indian rupee wherever permitted by the RBI. It must be permitted. When only Nepal and Bhutan was permitted as of now, and supply of services and recipient of services are not merely establishment of distinct person. In our case, they are provided to unrelated persons. So export of services is a zero rated supply. In terms of rated supply can be supplied without payment of tax under LUT in terms of section 16(3). It is assumed that export has been made under LUT. Next, sale of building. Sale of building is 1 crore 20 lakhs. 1 crore 20 lakhs. It is not payable because it is neither a supply nor a goods of supply, neither a supply of goods nor a supply of services in terms of Schedule 3 to the CGST Act, provided the entire consideration has been received after issue of completion certificate by the competent authority or after its occupation, whichever is earlier. Hence, the same is not liable to GST. Next, interest received on interest investment in fixed deposit with a bank 4 lakhs. It is exempted under the GST, so we will not pay any amount. Sale of shares are specifically excluded from goods and services. So hence sale of shares is neither a supply of goods nor supply of services, so he is not liable for payment of any tax. So total GST payable on outward tax will be 3,18,000. Out of this common credit will be calculated. That is tax and inputs. 35 lakhs for 12% and 15 lakhs will be 18%. That is inputs will be goods and input services will be services 18%. Out of that common credit attributable to exempted supplies. What is this? Common credit on inputs and input services into exempted supplies turnover. Exempted turnover divided by total turnover will be calculated. Exempted turnover will be 1 crore 33 lakhs 50,000 and total turnover will be 1 crore 94 lakhs. So as per section 17.3, value of exempted supplies includes value of exempted supplies. What will be include the exempted service? Includes supplies on which recipient is liable to pay tax on reverse charge basis. Reverse charge basis also includes for turnover calculations. Next, transaction in security sale of land and subject to class of para schedule 3, that is related to sale of building also included for total turnover, and sale of security based on schedule 3 rules. But sale of security sale value into 1% will be taken for the purpose of total turnover. So as per explanation to chapter 5 of CGST rule, the value of exempted supplies in respect of land and building, the value of adapted for paying stamp duty. Stamp duty will be considered. Stamp duty, how we will get the stamp duty? 250 divided by 2% in our case. Next, security value. So security is for security is 1% of sale value of social security. 250 crores I think sale value into 1%, 250 will be left. Next, further as per explanation to rule 2, the aggregate value of exempted supplies inter area excludes the value of services by way of accepting the deposit. It will not include the deposits, accepting deposit, extending loans or advances so far for consideration is represented by the way of interest. So it will not include the related FD amounts. Next, except in case of banking company, if it is a banking company or financial institution, it will be included. So it is a non-banking company engaging in supplying services by way of accepting deposits, extending loans or advances. Next, therefore, value of exempted supply in the given case will be in the following value. Output tax on which tax is payable under reverse charge will be 6 lakhs. Value of sale of building, that is 2 lakh 50 divided by 2%. So 1 crore 25 lakhs will be the considered as turnover. Next, value of sale of shares 250 crores into 1%, 2 lakh 50 will be considered as turnover, which comes 133,50,000. Exempted supplies means 133,50 and total turnover will be all will be included, including above transactions. Next, working note number 3, that is computation of ITC available in the electronic credit ledger, that is 6 lakh 90 will be available for electronic credit ledger, that is common credit, and legal services used in manufacturing products, that is taxable product related items of 63,000. Total electronic credit ledger will be 7 lakh 53. Out of this common credit will be attributable will be deducted. Common credit, how will you get the common credit? And 7 lakh 53 is the normal amount, and out of the common credit will be excluded. Next, 4,74,820. Net ITC will be 2,78,180. Next, question number 21. What is there in question number 21? In question number 21, 21 okay. Mrs. XYZ register person. Mrs. XYZ register person. Supplier supplies the following goods and services for constructing the building and complexes. So excavator for required period at an hour's rate. So they are providing register suppliers and supplying the goods and services for construction of building and complexes. So they are provided excavator for required period at a per hour rate. So per hour rate. Next, manpower for operation of excavator at per day when the excavator is sending, and with that manpower also sending, because manpower is required for excavator. Next, soil testing and seismic evaluation at per sample rate. Next, excavator is invariably hired out of along with operator. Similarly, excavator operation are supplied only when excavator is hired. So it is a composite supply. And principal supply will be the excavator for required period of hours. So a principal supply rate, whatever the rate will be applicable, apply for both transactions. Next, maintenance of services for following services: maintenance services for excavator, health insurance for operation of excavator, and scientific and technical consultancy for soil testing and seismic evaluation for given month. Higher charges of excavator will be 18 lakhs, and service charges for supply of manpower for operation of excavator 20,000. Service charges for soil testing and seismic evaluation at 3 site will be 2 lakh 50, and that GST paid on during the month will be maintenance of excavator 1 lakh, and health insurance excavator 11,000, and scientific technical consultancy for soil testing 1 lakh. So 1 lakh 2 lakh will be allowable for ITC. That health insurance for excavator operator 11,000 will be not available, because it is not allowable ITC. It is not allowable expenditure ITC when if that insurance is related to as per obligation of the company from the factory insurance in factory act, then it will be included as ITC, eligible ITC. Next, the rates were provided. Assume rate of GST is under. Hiring out of excavator will be 12%. Supply of manpower services and soil testing and seismic evaluation at the rate of 18%. See 18%. So excavator is 12%. So our in case excavator is main purpose 18 lakhs into 12%, 20,000 into 12%, 2 lakh 50 into 18% will be gross liability, and ITC was 2 lakhs. The remaining amount will be payable in cash. So answer question number 21. Computation of net GST payable by Mrs. XYZ. That is, gross GST liability will be 2,63,400. It is provided in below. Okay. ITC will be 2 lakhs. We are calculated, only 11,000 will not be allowable. Next, gross GST payable by electronic credit ledger. By note 1, what is there in note 1? Computation of gross GST liability. That is, higher charges for excavator 18 lakhs into 12%, 2,16,000. Service charges for supply of manpower, even though they are provided separate rate, it will be a composite supply. Principal supply will be higher charges for excavator, will be taxable 2,400. Next, service charges for soil testing and seismic evaluation will be 18%. 2 lakhs 50 into 18%, 45,000 will be payable. So 2,63,400 will be payable, and 2 lakhs will be eligible ITC. So note, what is there in note? Since excavator are invariably hired out along with the operators, and excavator operators are supplied only when the excavator is hired out. It is case of composite supply under section 2 class 30. So wherein the principal supply in the hiring out of excavator, as per section 80, the composite supply is treated as supply of the principal supply. Therefore, the supply of manpower for operation of excavator will also be taxed at the rate applicable for hiring out of the excavator, that is principal supply, which is 12% in our case. Next, to soil testing and systematic evaluation, they are provided the separate rate, so chargeable at the separate rate. Next, computation of ITC, that is maintenance of service for excavator, directly given 1 lakh rupees. We will take that. Next, health insurance for excavator operator to 111,000. It will not be considered because it is not an obligation to the company. Next, scientific and technical consultancy services, that is 1 lakh eligible ITC. So, as per section 17.5D, 17.5D, that is blocked credit. That is blocked credit. When it is blocked credit on goods and services received by a taxable person for construction of an immovable property on his own account. If any person is constructing a own account, that ITC will be blocked credit. Next, here through the excavator are used for building project, the same are not used by Mrs. XYZ on its own account for construction of immovable property. Instead, they are used for outward taxable supplies for hiring out of machinery. So, further excavator or say special purpose vehicle in our case, whose credit is not restricted under section 17.5. Therefore, ITC maintenance service for excavator shall be allowed. Excavator will be allowed. Okay. Therefore, maintenance services for excavator does not get covered by the bar under section 17, and the credit therein will be available. The same applies for scientific and technical consultancy of construction project, because in this case also the services is used for providing the outward taxable supplies of soil testing and systematic evaluation, and not for construction of immovable property. They are not constructing any immovable property, they are providing this and getting the outward taxable supplies. Next, section 17.5b allows input tax credit and health insurance only where in the inward supplies of such services is used by the registered person for making an outward taxable supply of the same category of goods or services, or both, or has on the element of taxable composite or mixed supply, or where it is obligatory for an employer to provide the same is to his employees under any law for the time being enforced. In the given case, it is assumed that it is not obligatory for the employer to provide health insurance to its employee under any law for the time being enforced. Therefore, the credit therein not allowed. Only when there is an obligation, then it will be liable for get the credit ITC. Next, question number 22. What is there in question number 22? 22. Okay. In question number 22, they are provided We Supply Private Limited is registered manufacturer of auto parts in Kolkata, West Bengal. The company has manufactured. Following additional details are provided. So, company reported this information relating to that. Raw materials 3.5. So, on raw material you will get the ITC available. Whatever the ITC available, you can get. Whatever the ITC you have paid, you can get. Next, consumables allowable. Transportation charges for bringing raw materials to factory. If it is a GTA services used, then it will be payable. And reverse charge mechanism. Salaries paid to employer in on rolls. It is not ITC case. Next, premium paid on life insurance policy taken for specified employees. If it is obligatory, then it can be allowable. Next, audit fee allowable. Telephone expenses allowable. Bank charges ITC allowable. Next, all the above amounts are exclusive of all kind of taxes wherever applicable. However, applicable taxes have also been paid by the company. The payment provided and receipts provided here like this. So, out of 3.5 raw materials, they are providing the following details. That is, raw materials amounting to 0.8, procured from Bihar. So, Bihar, where we are in stay. So, registered manufacturer of Kolkata. So, we are in West Bengal. We are purchased from Bihar. So, it is a IGST case. First, IGST case, that is 0.8 lakhs will be IGST case on tax rate. Next, 1.5 lakhs is imported from China. Basic custom duty will be 0.15 lakhs. Social welfare surcharge will be 0.015, and integrated tax. Whatever the integrated tax you have paid, you get the ITC. Next, remaining raw materials is procured. Remaining raw materials is procured from supplier located in West Bengal. So we are in West Bengal. We are purchased from West Bengal person. Out of such raw materials, material worth of 0.3 is procured from unregistered person. If you are purchased from unregistered person, you will not get the ITC. Next, 0.5 raw material purchased from registered located in, okay, 0.05 will be purchased from local person, but it was destroyed goods means blocked credit, it will not be allowed as ITC. Next, what they tell, 0 point from unregistered person and goods destroyed, seepage problems in the factory and thus could not be used for manufacturing purpose. Okay. Next, remaining whatever the remaining material procured will be West Bengal, so it will be treated as CGST GST. Next, consumables are procured for registered supply located in Kolkata and include diesel worth of 0.25 lakhs for running the generator. So out of 1.25, I think consumables will be 1.25 and 1.25, 0.25 will be diesel case, diesel amount. So diesel is not liable to GST, so it is not come under GST. Out of this is not notified as on date, so 0.25 will be removed, and out of 1 whatever the tax you have paid, you will get the ITC. Next, transportation charges compromises of 0.6 lakhs paid to GTA and in Kolkata and 0.1 lakhs paid to Hartspool Court. GST applicable on services of GTA is 5%. When there is provided GTA applicable to 12%, that is we are not liable to pay, but they are provided 5%. So our supplier is not paying, so we need to pay that amount at the rate of 5%, but only the GTA will be taxable, but not for Hartspool Court. Next, transportation charges. Okay, transportation charges completed. Life insurance policies are specified. Employees have been taken by the company to fulfill statutory obligations in its record. The life insurance service provided is registered in West Bengal, so there is obligation for life insurance, there is obligation, so it will be eligible ITC. In West Bengal they have taken, so CGST GST will be arrived from premium. Next, telephone expenses pertain to bills for landline phone installed at factory and mobile phones given to employees, so official use, though total amount will be eligible for ITC. Bank charges are towards company current account maintained in private sector bank registered in West Bengal, so bank charges ITC will be allowable for ITC. Total ITC available will be bank charges ITC and telephone ITC, audit fee ITC, life insurance ITC, transportation related 0.6 ITC, consumable excluding 0.25, remaining will be allowable, and under raw material it will be 0.8 into tax rate and directly provided 0.2997, but 0.05 will be not provided because it is from which is a blocked credit, and 0.03 will be unregistered, it will also not provided, and remaining will be allowable for creditor. This is related to creditor. Next, total breakup of sales is under. So as of now they provided ITC related information. Now it will be sales outward tax liability information. Sales in West Bengal 7 lakhs. Sales in state other than West Bengal 3 lakhs. So export under LUT will be 5 lakhs. So West Bengal sales interstate. We are in West Bengal and they sell in West Bengal. So it will be interstate case. Next, sales in state other than West Bengal. So 3 lakhs will be IGST case. Next, export under LUT. Export under LUT means it is not liable to GST. Next, opening balance of ITC with the company for tax paid. So opening ITC was provided. Out of the opening ITC, and we must add the current paid ITC, whichever we are calculated above. Next, complete total ITC available with we supply private limited for the next period, and net GST payable in the case may be from electronic cash ledger by we supply private limited for next period. Okay, CGST GST will be 9%, IGST will be 18% wherever applicable. The necessary condition for availing ITC has been complied with by the supplier limited. You are required to make suitable assumption wherever necessary. Okay. Question number 22, I think so. Answer. (22) 21 is completed. That 2 left, 22 will be. First, we will take the ITC portion. Whatever they have provided opening ITC, that will be considered first, opening ITC. Next, raw materials which have purchased local from Bihar. Bihar means we are in West Bengal, we are purchased from Bihar. This is IGST case. Next, raw material for imported from China. Only IGST portion will be taken. That basic custom duty and cess will not be considered. Next, raw material purchased from unregistered supplier within West Bengal. It is not a GST portion. They are not pay any amount. Next, raw materials destroyed due to seepage. That is blocked credit. So we will not take any ITC. Next, remaining raw materials purchased from West Bengal. That is CGST, GST will be arrive. Total ITC for raw materials. Next, consumables. Out of consumables, only 1 lakh will be considered and 9%, because 0.25, that is 25,000 related to diesel. GST rate was not provided any. As of now, they are not liable to GST. Next, salaries paid to employees on rolls, so it is not taxable case. Premium paid on life insurance policy taken for specified employees, but here they have tell that there is a obligation, so we are considering that ITC. Next, audit fee eligible ITC, telephone eligible ITC, bank charges eligible ITC. Next, total ITC available for the tax paid will be 55,650, 48,650, 53,730 and 1,57,670. Why there is a CGST and GST difference? Because opening balance difference is there. Next, computation of net GST payable. Out of ITC available, we should take that ITC has a eligible ITC, and whatever the liability will be considered. Here interstate will be 63,000 and interstate will be 54,000, but export was no GST will be available. Let ITC available for being set off, amount will be deducted, and net cash GST payable from electronic cash ledger, total amount. And for inward reverse charge mechanism, that is we have used the transportation from GTA, that must be paid in cash only. So no total GST payable through electronic cash ledger will be 8,850, 15,850, 6,630. It is payable in cash. Next, what is there in notes? Credit of input tax, CGST, SGST, IGST paid on raw materials used in the course or furtherance of business is available in terms of section 16. Okay. Next, IGST paid on imported goods qualifies as input tax in terms of section 2 class 62. Therefore, credit of IGST paid on imported raw materials used in the course or furtherance of business is available in terms of section 16. Next, tax on interstate procurement made by the registered person for unregistered suppliers is levied only on notified category of goods and services. Next, goods destroyed, which is ITC not available on destroyed inputs in terms of section 17.5. Next, consumables being inputs used in the course or furtherance of business, input credit is available on same terms. Section 16.1. However, levy of CGST on diesel has been deferred. It was deferred till such date was notified by the central government on recommendation of the GST Council. Hence, there will be no levy of GST on diesel. There cannot be any ITC. Next, third one, in respect of any interstate road transportation of goods undertaken by GTA who has not paid at the rate of 12%, that is CGST 6%, SGST 6% for any person registered under the GST law. So CGST is payable under reverse charge by the recipient. Here only they are telling CGST, and collaterally we should pay the GST also. The person who pay is liable to pay freight for transportation of goods is treated as person who receives the services. So he will pay on cash and he can get the ITC available. Next, further tax payable under section 9(3) of GST Act qualifies as input tax. So if you have paid any GST and reverse charge mechanism, you will qualify for claiming that amount. Next, further interstate supply service by way of transportation of goods by road, except the services from of GTA and courier agency are exempted from CGST. Since no GST is paid on such services, there cannot be any ITC on such services. Next, services by employees to employer in the course of or in relation to his employment is not a supply in terms of section 7. Read with para 1 of schedule 3 of CGST Act. Therefore, since no GST is paid on such services, there cannot be any ITC on such services. That is employer-employee relationship, there is no service. Next, ITC and supply of life insurance is not blocked credit if it is obligatory for an employer to provide such a service to its employees under any law for the time being forced. So, if the amount was paid and premium life insurance policy will be available as ITC under section 16(1) when it is related to course or furtherance of business. Next, audit fee, telephone expenses and bank charges all services used in the course or furtherance of business and the credit of input tax paid on such services will be available in terms of section 16(1). Next, export of goods is a zero rated supply in terms of section 16(1)(a) of the GST Act. A zero rated supply under LUT is made without payment of IGST tax, integrated tax. Next, since export of goods is a zero rated supply, there will be no apportionment of ITC and full credit will be available. Next, ninth point, as per section 49(5), read with rule 88(a). What is there in 88(a)? ITC apportionment. First, we can use the IGST utilization. IGST utilized towards payment of IGST first, and then CGST and SGST in any proportion. They are not tell any proportion. So you can take any proportion and any order. Next, CGST is utilized towards payment of CGST and SGST. If you earn any CGST liability, you must pay the first IGST amount and CGST amount. In other, here ITC of CGST we shall be utilized only after IGST of IGST has been fully utilized. Once IGST was completed, next you can say like the CGST or SGST also same like that. Next question, point number 10. Section 49(4) lays down that amount available in electronic credit ledger may be used for making payment towards output tax. However, tax payable under reverse charge is not an output tax in terms of section 2 class 82. Therefore, tax payable under reverse charge cannot be set off against the ITC and thus will be payable in cash. So, reverse charge mechanism, it will be payable in cash only. Next, CGST and SGST are chargeable on interstate inward and outward supplies, and IGST is chargeable on interstate inward and outward. Next, question number 23. What is there in question number 23? Number 23, 24, 25, I think 3 questions will be discussed in next class.